Hello viewers, this is Geeta. Welcome to my channel. In this video, we are going to see direct posting of ledger. It means without preparation of a journal entry. So for this, I have taken a sum number 10 from class 11 book. Prepare Anand's account from the following details. The moment you see this type of ledger, you should understand what type of account it is. As per traditional approach, there are three types of account. One is a real account, personal account, and a nominal account. Here, Anand is a person, so we have to prepare a personal account. What is the golden rule for personal account? It is debit the receiver and credit the giver. That's what we are going to follow here. Okay, you can think on either way, as per traditional approach or as per modern approach. If you think as per modern approach, if it is a liability, if the liability increases, you have to credit it. If the liability decreases, we have to debit. For your easiness, I am taking as per traditional approach. Traditional approach says debit the receiver and credit the giver. So we are going to see what are the transactions. So first you have to write Anand's account, and it is a T format, shape format. So debit and credit, the moment you see an account, you have to write debit on the left side and credit on the right side. So we are having a column of date, particulars, journal folio, amount, again date, particulars, journal folio and amount. What is the journal folio? It is the journal page from where these transactions are transferred and posted in this ledger account. Okay. So it is just for reference. So first thing is that they have given credit balance of Anand's account. You should also understand what is a credit balance and what is a debit balance. Whenever you prepare a ledger account, when the debit side is more, total of debit side is more than the credit side, then it is a debit balance. If the total of credit side is more than the debit side, then it is a credit balance. Credit balance for a person, then it means that he is a creditor. Credit balance means that person's balance is in the credit side. It means that the business has to make payment to that fellow. It is a liability for the business. We have to make payment to that extent to that fellow. So that is a credit balance. Okay. So now this Anand is having a opening balance. Opening balance is a credit balance. Then we must write it on the credit side as by balance brought down. Okay. So first you write the balance here. I am writing the amount. Then I am writing in the particulars by balance brought down. By balance brought down. So what is the date? This is on July 1. So the year you can write only one time. You write July 1. We have to make payment to Anand 4,000 rupees on that date. Next transaction is amount paid to Anand. The business is making payment to Anand. Anand is the receiver here. So you have to debit the receiver. So how much it is? 2,000 rupees we have made payment. So paid only they have given. Whether it is through cash or bank, it is not given. So we can comfortably take it as cash account. So okay, we are going to record the reason only here. So why we are debiting Anand? Because cash has gone out of the business. So this date is also on 15th July. So I am writing here July 15. You can write the year also 2017. So how much we have paid? 2,000 rupees. Next transaction is on 18th July. We have purchased goods from Anand on credit. So Anand is the giver. he gave goods to the business. So he is the giver. So we have to credit him. How much we have purchased? 8,000 rupees is the purchases. So what is the reason of giving a credit to him? We have purchased goods. So whenever we purchased goods, we can write purchases account. Okay, by purchases account, we are crediting on and for 8,000 rupees. This purchases has happened on 18th July. So I have recorded the date also. The next transaction is paid to Anand. Again, we have made payment. He is the receiver. So I am going to debit this fellow with an amount of 3960. Again, I am going to record the reason as because of cash we are debiting. The business has made a payment in cash. This is made on 20th of July. Okay, so next is discount allowed by him. So he said that you can take a discount of 40 rupees. That is the discount received by us. What would be the journal entry on? And the account is to be debited for 4,000 rupees. Cash has gone out 3960 and discount received for the business it is 40. So we are going to debit this fellow for the discount allowed by him also. Clear? So discount allowed, I'm writing in short. Discount, you have to write in full. Discount allowed by him is 40 rupees. Okay, then again on 25th, we have again purchased from Anand. When they write simply from Anand, only they give the name and they don't give any cash or something else, then you have to treat it as a credit transaction. So again by purchases account, we have to credit Anand by 5,000 rupees. Hope it is very clear, and it is very simple thing also. This purchase has happened on July 25th. So now when every transaction is posted, you have to see which side is greater. Generally when we look into this, 8 plus 4, 12 plus 5, 17,000. So this side is more than the debit side. So we are going to make the total of credit side first. So what is the total? 8 plus 5, 13 plus 4, 17,000. So you have to write the same total on this side also. 17,000. So this means that we have to make a payment of 17,000 to him. Out of this, we have already made payment of 6,000 rupees. So what is the 6,000 rupees is already paid. What is the balance payable? 11,000 rupees is the balance payable. So you have to write to balance carried down. This is the closing balance. Always the balance will appear, closing balance will appear on the opposite side. This you have to put the date as July 31 because July is having 31 days. And don't forget to bring this balance carried down to opposite side. This will be on the next month. This is the opening balance. So by balance brought down, we have to write 11,000 because this is the credit balance still payable to Anand. Clear? I hope so. So now we will see one more example of furniture account. Prepare furniture account. As I said, you have to find out first the type of the account. Furniture is a real account because they did not give me the business, what type of business is carried on. So for a other business, furniture is an asset. So asset is a real account. Real account will always have a debit balance. Okay, furniture in hand. In hand means it is a debit balance. So we have to write it on the debit side. I am writing here itself furniture account. Furniture account. So you have to write the year is 2016. So Jan 1 balance brought down. 2 balance brought down. 2 balance brought down. How much was the balance? We were having 2000 rupees furniture was already available with the business. Now what they did, they have purchased furniture by giving cash. So cash has gone out and furniture has come inside. What rule you are going to apply? Debit what comes in and credit what goes out for a real account. So I have to debit 4000 rupees. How this 4000 rupees furniture has come? By making payment in cash. So to cash account. So what would be your journal entry? Furniture account debit to cash account. So this purchase has also made on January 1. Now coming to the next transaction, we have sold furniture. So furniture has gone out. Credit what? Goes out. So we are going to write here by, they have not given anything whether it is credit or cash, so you have to take it as cash received. So I am going to write it by cash account. If they have given any name, then we can take it as a credit transaction, because nothing is mentioned, no name is mentioned. So I have to write it as cash account. My furniture has gone out to the extent of 400 rupees. So you are able to see. So now on 31st January, we have to close this account. So what happened? The debit side is more. So I am going to total the debit side. So the debit side total is 6000 rupees. So don't forget to write the last date. So January 31, I am going to write the same total on this side also. What is the difference? 6000 minus 400 is 5600. This much balance of, this is the closing balance. Closing balance will appear on the this side by balance carried down. It means this much furniture is available with the business. This will be brought down for the next month. So you have to write February 1. You have to bring it balance brought down. Whenever you write the balance brought down, it means this much furniture is available with me. That's all. This is nothing so difficult in this. Hope you are very clear with all these things. First thing is that you have to identify the account. Then you should start, you know the rule, and then you should start posting them in the ledger. Thank you for watching.